What a week it has been for BETR stock, also known as Better Home and Finance. On Tuesday, the stock put on another incredible display of strength, closing the session at $67.75 a share, up $17.77 on the day. That's a gain of more than 35% in a single session, on top of the already explosive move we saw the day before. To put this into perspective, since last Friday the stock has surged more than 120%, and year-to-date it is now up nearly 700%. Very few names in the market can claim those kinds of returns in such a short span of time. The question everyone is now asking is simple: what exactly is driving this momentum, and is it sustainable? At the heart of the story is Eric Jackson, the founder of EMJ Capital, who has been very public in his endorsement of BETR. Over the last several days he has described the company as the Shopify of mortgages, a bold label that has captured the imagination of traders and investors. The comparison is powerful because Shopify revolutionized online retail by creating a technology-driven platform for small businesses to operate online. Jackson is saying that BETR, through its technology stack, can do the same thing for homeownership and mortgages. That kind of narrative is easy to latch onto, and in today's market, powerful narratives can be just as impactful as raw earnings numbers. So what does the company actually do? BETR is the parent of Better.com, a digitally native mortgage and home ownership platform. The company is trying to take the painful, paperwork-heavy process of buying a home, securing a mortgage, and getting insured, and replace it with a streamlined, technology-first approach. At the center of this effort is Tinman, its AI-powered underwriting and processing platform. Tinman automates much of the loan workflow, cutting down human error and speeding up approvals. They also have Betsy, a voice-based AI assistant that interacts with customers and guides them through loan applications. The idea is that by removing friction and using automation, they can offer a better, cheaper, and faster mortgage experience than traditional banks or brokers. Beyond mortgages, BETR also offers insurance products and even real estate services, meaning the long-term vision is to control the entire customer journey in home ownership. From applying for a mortgage to securing insurance and even closing on a property, BETR wants to be a one-stop shop. It's this ecosystem vision that underpins Jackson's Shopify comparison, a fully integrated platform that captures more value by keeping customers inside the ecosystem. Now let's look at why Jackson believes this stock could be such a winner. One of the big catalysts he points to is the recent retirement of more than $500 million in convertible debt that BETR owed to SoftBank. That move significantly improved the company's balance sheet, eliminating a major overhang and freeing management to focus on growth rather than on looming liabilities. When a company that has been burdened with debt suddenly lightens that load, investors often see it as a major de-risking event, and Jackson clearly does. Another part of the thesis comes from growth projections. In recent quarters, BETR has reported increasing funded loan volumes and revenue. While the absolute numbers are still relatively small, tens of millions of dollars in revenue per quarter, the growth rates are strong, and management has said they are targeting break-even on an adjusted EBITDA basis by 2026. Jackson has gone even further, projecting that the company could scale to as much as $12 billion in revenue by 2028 if it executes properly. That's an ambitious target, but it's exactly the kind of big-picture story that gets investors excited. The timing also plays a role. With the Federal Reserve expected to cut interest rates further this year, the real estate and mortgage sectors could get a boost. Lower rates generally lead to more home buying and refinancing, which increases mortgage origination volumes. If BETR is able to ride that wave while offering a cheaper, faster process, it stands to capture outsized share. For investors who see rates as a tailwind, BETR suddenly looks like a timely play. So why did the stock surge 35% on Tuesday after already putting up a 46% gain the day before? The simple answer is momentum feeding on itself. Once Jackson's thesis gained traction, traders jumped in, shorts scrambled to cover, and the low float of the stock created sharp moves on relatively modest buying volume. This kind of reflexive action is not unusual when a stock suddenly captures the market's attention. Monday's surge created buzz, Tuesday's follow-through convinced more people it wasn't just a one-day wonder, and the cycle of hype and FOMO accelerated. That's how you get a chart that goes nearly vertical in 2 days. But the real issue investors need to grapple with is whether this kind of move is grounded in sustainable fundamentals or whether it's simply narrative-driven momentum. On one hand, the thesis makes sense. BETR has real technology, it operates in a massive industry, and it has recently de-risked its balance sheet. On the other hand, the company is still deeply unprofitable. Its revenue in 2024 was around $108 million, while its net losses were in the hundreds of millions. The gap between current results and the lofty projections of $12 billion in revenue is enormous. For BETR to justify even a fraction of its current valuation, it will need to scale at a pace few companies ever achieve. Execution is another key risk. Mortgage origination is heavily regulated, and AI-driven platforms like Tinman must not only be efficient but also fully compliant with complex rules. If regulators raise concerns or if the technology doesn't scale as promised, BETR's growth story could be derailed. And let's not forget that the mortgage business is cyclical. When interest rates are high, demand falls. BETR might be able to operate more efficiently than competitors, but it cannot escape the gravity of macroeconomic cycles. There's also the matter of valuation. After surging to $94 intraday on Monday and closing near $70 on Tuesday, BETR is no longer a hidden gem. A lot of future growth is now priced in. Investors need to ask themselves, are they buying into a long-term disruptor at an early stage, or are they chasing a stock that has already run too far, too fast? This tension between momentum and fundamentals is the central question. For traders, the volatility itself is the opportunity. Stocks that move 30 to 40% in a day attract day traders, swing traders, and momentum players who thrive on volatility. But for long-term investors, the calculus is different. They need to assess whether Eric Jackson's thesis holds water beyond the headlines. Can BETR truly become the Shopify of mortgages? Can it scale revenue by more than 100-fold in just a few years? Can it sustain growth through interest rate cycles and regulatory scrutiny? These are the real questions that will determine whether Tuesday's surge is the start of a multi-year rally or just another spike that eventually fizzles. It's worth noting that Jackson's track record gives weight to his opinion. He has been early and right on several technology names in the past, and when he goes public with a pick, people listen. That said, even the best investors are not infallible, and markets have a way of humbling bold predictions. The risk here is that investors take the Shopify comparison too literally, forgetting that Shopify itself was a once-in-a-generation success story that few companies will ever replicate. So where does this leave us? Tuesday's 35% surge solidifies BETR as one of the hottest stocks in the market right now. The story is compelling, the narrative is powerful, and Eric Jackson's endorsement has created a spotlight that few companies can match. But the fundamentals are still catching up. The company has years of heavy lifting ahead if it wants to justify today's excitement. It needs to grow loan volume massively, prove its technology can scale, reach profitability, and navigate macro headwinds, all while convincing investors that it can become more than just a niche mortgage originator. For those watching from the sidelines, BETR is now a case study in the intersection of narrative and fundamentals. Narrative has clearly taken the driver's seat for now, but over time, fundamentals will have to take over. If they align, this could indeed be the beginning of a transformative story in the mortgage industry. If they don't, then Tuesday's surge will be remembered as another fleeting moment of market mania. To wrap it up, BETR's rise to 67.75 on Tuesday underscores both the power of big ideas and the risks of chasing them. The idea of becoming the Shopify of mortgages is bold, exciting, and easy to sell, but the execution path is steep. Investors now face a choice. Do they trust Eric Jackson's vision and ride the wave, or do they step back and wait to see if the fundamentals can catch up to the hype? One thing is certain, BETR is a stock to watch closely in the days and weeks ahead, and whether you're bullish or cautious, it's clear that this story is only just beginning.